So next, you have the opportunity to ask the investors how to take your startup up to the next stage. What are investors looking for? Here to answer those questions and any others you may have, I'm thrilled to introduce our panel of investors with me as a moderator. So first, we have Stephanie Opdam, VC at Notion. Jack Wang, investor at Keen Venture Partners, and Ravit Warsha, partner and head of health at Kamet Ventures. Welcome, everybody. We will start with a few questions here. So I see people coming in. Hello, everybody.
Hello.
Good to see you. So let's get started. Let's do a quick round of introductions to get to know each other and also to know the company you're working for. Maybe a quick background about the history of your company as well. I see Stephanie first, so maybe Stephanie, can you take it? Be the first one to introduce yourself.
Sure. Yeah, and thank you so much for having us, Joel. So I'm Stephanie, born in the Netherlands, moved to London in 2014 to do my master's degree here, but mainly to work in VC. So I've been working as a venture capitalist, investing in startups for the last 5.5 years, of which the last 2.5 years I spent with Notion Capital. And Notion Capital, for those of you who don't know yet, is a B2B SaaS-focused VC fund based out of London. We invest in the Series A and B stages of Europe's category-leading tech startups. We have made over 70 investments to date, many of which actually use AI as their product offering. And we're now 10 years, I guess, in business, so quite established now.
Yes, thank you. Thanks for the background. We will go more in depth about the investments as well. So thanks for the introduction. Ravit, maybe you can introduce yourself as well.
Sure. Hi. So hi, everybody. Thanks for having me. My name is Ravit Warsha, and I'm a partner at Kamet Ventures, leading its healthcare innovation activities. I'm based in Tel Aviv, Israel. And Kamet is a venture builder, so it's not a typical VC. It's actually a mix of a VC and an incubator. We started in 2016 with funding from AXA Insurance, and we are focused on creating brilliant companies that redefine the sectors of insurtech and health tech. So we have two focus areas. We're a global company with offices in Paris, London, and Tel Aviv. Currently 19 portfolio companies in Europe and in Israel. And my personal background, I'm a techie who moved into the healthcare space, worked for the Ministry of Health in Israel for a few years, and then back to the industry on the investor side.
Yeah, nice. Really good sector to be in now with all the developments to see what the technology is bringing us. Thanks, Ravit. Jack, can you also introduce yourself?
Of course. Hi, I'm Jack here. Australian, actually. My accent's a bit washed away, so it's where you're from the game. I'm from Australia originally, Australian Chinese at that. I've been working for Keen Venture Partners for the last 2.5 years now. We're a Amsterdam, if you guys are locals who know us, and British fund. They got 2 offices, London and Amsterdam. And we sort of do Series A and B investments, both consumer and B2B across Europe. I am a techie as well by training, a couple years in software engineering, high frequency trading kind of platforms, a couple years in product management in fintech, a couple years at Amazon as doing sort of ventures with their marketplace team, and did my business school here in London, and I joined Keen afterwards. So I tend to do a bit more of the AI, cybersecurity, DevOps tools, data infrastructure, that kind of stuff. So the Series A and B investments across Europe.
Yeah. Now, great to have you all in this panel. I think it's going to be a nice conversation. Probably there are also a lot of startups watching right now. So I just want to have an open conversation with you about what the trends that are now in the investment world and what you're looking for. So I think a lot of companies will see this panel as another investment panel, but maybe you can give some really insightful tips and tricks of how to get the attention of an investor. What are like the special things that you're looking for in a company that that normally not a lot of people know about. Can you maybe elaborate on that? Jack, let's start with you again.
With me? Yeah. So we invested a little bit later, so around, let's say, Series A and B, which seems to be the case where you would have already had a product already. The product is probably running quite well. You have at least Series A, a couple proof of concept with enterprises, and then maybe one or two like fully contracted clients. Let's say if you verticalize AI company or machine learning company. And the Series B has been more interesting because that's when you start to see a bit of more financial numbers and so forth of things. One of the things I tend to look at is, and I'll start with the finances and move into the tech afterwards, is so your cost of goods sold in terms of a machine learning company. What that really means is that it's gross margins, but what that really means is how much money are you spending on the training data or getting the training data. What you tend to see is sort of from C to Series A and a half, your cost of goods sold, your training cost actually goes up because you're collecting a lot of data. You're building the models, your model's getting better. But Series B onwards, your gross margins start to increase because your cost of goods sold starts to decrease. You're training less, your model's getting more mature. But at the same time, you'll never also reach like a full 90, 80% margin, or rarely do that, because the models you train will plateau in accuracy and precision. So eventually, you're spending a lot of money capturing the tail end of your use cases. And that's sort of what you do on an operation level, which also means that up until probably post-Series A, you have a lot of money spent on hiring data scientists, data labelers, God forbid, or if you're using outsourcing agencies, that's fine as well. More engineers working on deployment of these rare models to get split out from your main model. You have a lot of tail-end models as well. So you see these costs starting to add up a little bit as you go along. So I guess what I'm saying is that, like, from our investment fees is that we expect the gross margins to change quite a bit with the maturity of your machine learning models in your business. And we identify that curve quite clearly. Yeah. Also, as a founder, that's important for you to sort of notice if your tech is working or not fundamentally.
Yeah.
It's interesting to hear, because it's very different to the things that we're looking at. Essentially, we are super early in the stage of the company, and we're actually we're very focused on sectors on one hand, and on the other hand, we're looking so early that there isn't much to see typically. We're many times looking at the team, and the team is very important in every stage. But for us, many times it's the main thing to look at. And sometimes it's a single entrepreneur. So sometimes we start with an entrepreneur in residence, even with an idea or with an idea that we build together. And we take we look at this very seriously, and we interview the entrepreneur, and we are looking for the ones who have both the vision and dream big, that they are doers, but also structured, or at least can accept our structure and appreciate the guidance and the criticism that we give them. So we want them to be experienced to the level that they understand where they need our support and guidance. And I think this is relevant for all stages of a company, for the team, but it's critical for us in the early stages.
Yeah, I totally second that, Ravit. We have also done a lot of research within our fund on what makes state, like a whole analysis on unicorn companies in the US and Europe, how have their teams over time, and see those companies who are set out to become a unicorn versus those that don't actually make many more hires in the leadership stages. What you call game changers, so overspending on hiring. So 80% of a typical fundraising round would be spent on new hires, but you also make more of those over time than companies that set out to ultimately not become a unicorn status. So I think that's a fascinating. I think the other thing to chip in on what specifically excites me and what I'm looking at is I see more rapid iteration cycles taking place to achieve product market fit. I think especially in the adoption of AI applications, there might be too many companies that focus on long implementation cycles, and those feedback cycles after a 12-month kind of sales cycle and then a 12-month implementation cycle it's just relatively long, and so I'm a good advocate of, hey, can you break it up in particular cycles where you get faster iterations, do quick testing cycles, smoothen out the customer journey much more, so that you can earlier on get that product market fit, know what the market wants and how they adopt it and how they use it, to then kind of go out and build it in a full-blown scale-up version. So that's something that I've seen changing, especially in the world of AI, and looking for funding.
Nice. Yeah, thanks. It's great to see how every company or investment fund has their own way of approaching and their own identity. So there's also a lot of flavors there. And maybe now, if we dive into the current trends and what is happening in the society, what are the trends that you can identify in the recent investments that you've made as a firm that are interesting to share, of course, with the audience?
Want to go first?
Yeah, I'm happy. Oh, sorry. Go ahead, Ravit.
Go ahead. No.
Oh, okay. Well, first of all, I think we're entering, with the help of COVID and further digitalization, we're entering an era of a SaaS everywhere, right? Software is everywhere, used everywhere for everything. And so most of these success stories I'm seeing nowadays focus on kind of end client facing front end software. So any software that is generating eyeballs, and also that kind of increases revenue for customers. A lot of it is focused on part automations, right? The easy part automation, which kind of delights the customer experience. And so to give you an example of kind of looking at one company I invested in relatively recently, it's a kind of no-code automation platform called Brighter, based in Germany. And what they're doing is they help lawyers and consultants automate part of their works, and share that with their end clients. And so what you then see is that the corporate end clients come back to Brighter and say like, hey, we saw that the consultants were using this platform to automate part of the work they did for us. We want to use that too. And so what you then see is like this huge virality loop taking place. And so kind of all these things that I'm just mentioning feeding into the trend of what you call product-led growth, right? The product speaks for itself. The value of the software is evidence. And customers just are able to like look and see what they see in the market and be able to buy it themselves, utilize it themselves, implement it themselves, and then go with it. So that's one of the kind of trends I'm seeing in this market.
Yeah, Ravit, you wanted to add something as well to that?
Yeah, so I can talk a very long time about all the recent trends in healthcare. Most of them we've seen before COVID, and they have now become mainstream, I would say. So for someone like me who's been in the digital health space since its inception, I can say over a decade ago, this is an incredible milestone to live through. So this is a personal note. And it is also great to see how much the AI in healthcare specifically is becoming more acceptable and more mainstream. Of course, it is getting also more advanced and people are expecting more. So we expect it to be more explainable, for instance. And there is the federated AI that is becoming much more in use. But again, I think it's all the known trends that are now just becoming stronger. And one of our most recent investments was actually in the childcare space, which is not healthcare. We sometimes do other things as well. And we've started to look at it before COVID, but COVID gave it a good push and a twist to design a much needed solution nowadays. So I think in a way, COVID has actually opened all markets towards, like discussed before, towards the more remote services that we expect to see everywhere now.
Yeah. Great. Yeah, that's nice to hear your perspective on that. And Jack?
Yeah. So for me, I spent time a little bit differently. I looked into a lot into the privacy tech and privacy data space. To me, it's not 100% machine learning, but again, most of the machine learning you've done in the enterprise level is based on some kind of proprietary data that's usually either super secret or GDPR-wise, it can't be shared. There's a few different approaches to this. Fundamentally, the most popular one, I think, VC-wise, is or was at least synthetic data. And I believe fundamentally, Europe will be the category. Sorry, the category leader for data privacy will probably come from Europe, just because we have the highest regulation fundamentally, right? So after Pivotar, which is sort of not absolutely machine learning, it's more mathematical in their solution. The synthetic data wave came about as seed, which is to create sort of, it sounds like fake data that has the same statistical significance as real data, and you could train machine learning models on that and still be GDPR compliant and so forth. And then even more recently, there's been a sort of, rush of investments into more, less algorithmic driven, but more simplistic hardware level play. So like Intel has this hardware feature called Intel SGX that pretty much encloses your memory in a certain, let's say, encryption or a certain way that basically makes it GDPR compliant if you compute stuff on there. Which certainly means that you might not need synthetic data. You might just need this thing, in which case your tech or investment or your companies are building more data collaboration or software layers on top of the Intel feature. And AMD has one called SEV as well, to facilitate machine learning on top of that in whatever form or format. So the wider challenge, I guess, for me to understand still today, and if you guys know anything about this, please share, is to say, okay, if you're a corporate buyer sitting out in KPN or ING or Dutch corporate or British corporate BT or whatever, to you, which one do you feel the most comfortable with to understand? And that's, chances are, that's what will be the frontier of your adoption curve. I don't know yet, we'll figure that out, but I fundamentally believe the privacy tech is the infrastructure for machine learning in Europe.
Yeah. Nice. And we have it's a pity that we have a limited amount of time, because we could talk for hours still, but I also want to touch on the fundraising climate as a whole, like the developments that you're seeing based on these trends, and how do you see it moving forward? What do startups need to anticipate on, and how do you see the future of this climate? Maybe you can touch upon this shortly.
So I can start this time.
Yeah, Ravit, this time you're.
So after the initial COVID shock, we see money that keeps flowing actually into strong companies. Most of our health tech ventures have actually benefited from the COVID crisis, while others had to make some pivots and adaptations, of course. But the trend of remote care has become the reality of everyone, and there's a huge demand for such solutions from the patients themselves now. For things that we thought we would need to educate the market for, now it's coming from the market, which is a huge change. And we expect this change of behavior to stay with us and affect all areas of our lives. Obviously, healthcare is just one of the first, together with a few more. And in terms of fundraising in general, I think there is money in the market. It's starting to go back to normal, and maybe a little bit more picky in my perspective. Yeah. So maybe a little bit more picky in investment decisions.
Yeah. Stephanie?
I think it's a bit two-pronged, right? As Jack just described, we as VCs have to rethink where enterprise IT spend is going, right? Or consumer spend in maybe to some extent Ravit's case. So that's one aspect of it. And I think the second is that we're still living in this COVID, and we see a little bit more of a binary kind of a division in the market. I see that where earlier stage companies that have a slightly lower burn but do something technologically very advanced and work on things like automation, AI, machine learning to help a specific enterprise use case, those companies will keep on getting funding and will keep on growing very fast. I think the models that have slightly higher burn and are in kind of more affected sectors, they will have a much harder time fundraising. But so far, I've seen the financing climate still being super attractive right now. If you look at the last crisis, the financial crisis, we saw that 18 months after the onset of the financial crisis, the VC market dried up because we need to get our money from pension funds and insurance companies, etc. And if they're not giving more, then at some point the flows. But that I've not happening right yet. That'd be something that happens 18 months after the COVID crisis started. So for now, I think still a healthy climate. What happens in 6 to 8 months time, that I'm a little bit more uncertain about.
Yes. Jack, do you have we are running out of time, but do you have do you agree with?
Yeah, I'll keep it short. If you're doing innovation before, now doing productivity.
Yeah, well,
that's how you said. So
that was really good. Thanks for that. Yeah, thanks everyone for this great session. So some very helpful advice, I think. Our investor panelists will now be available also to take any questions you may have. So please follow them into the networking lounge and a speaker room. The link to that room is going to be dropped now into the session chat on Hopin. Here on the main stage, we're taking a short break and we'll be back with you in a couple of minutes. See you soon.